Hey, this is Jack from Alpha Charts with a state of the market video. Today is 12/31/2022, New Year's Eve. Happy New Year. I hope everyone has a happy and healthy 2023. So this is the last one, obviously, of the year. If you haven't followed me yet, you can go ahead and like and subscribe to this video. Make that your New Year's resolution to subscribe to my videos. And also follow me on Twitter at AlphaCharts365. Okay. Let's get into the charts. State of the market. Where are we? What are things looking like? Oh, by the way, I'm also going to be doing my monthly charts and looking at some longer term charts. Make a video out probably tomorrow on that. So make sure you get that, and also stocks to watch. And I may be putting out some other content this weekend between now and Monday. So again, keep your eyes open, and that's why you have to like and subscribe to the channel, right? All right. Anyway, SPX still in a downtrend. Price below declining 200-day moving average, 23, 50, blah, 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 right? It is below all of its moving averages. And obviously, there's not much traction going on here. This was the Santa Claus rally, and it was pretty lackluster so far. Again, lower volume as expected because it's the time between Christmas and New Year's, and a lot of traders are on cruises. You see the week was down 0.14, so basically a sideways week, but sideways within the context of a downtrend, which means that the most likely push is going to be to the lower side. Now, that being said, we still have not taken out the October lows yet, right? This October 13th low is still intact. So technically, we are still in a higher low scenario until this low gets taken out and that low gets taken out. Okay. So, and again, maybe this is some kind of basing pattern that's happening. We have to keep an open mind to everything. But in order for that to all to be true, we would need price to get above the 200-day moving average. We would need that to start to flatten out. We would need price above this downtrend line, which everybody and their mother is watching. All right. So again, those are the things that we have to see happen, and they just haven't happened yet. So our bias has got to be to the downside at this point. All right. Looking at RSP. Now, RSP, when we go to a weekly chart, was down 0.03. So roughly the same, close enough for my, for what I'm doing. Again, looks like a bear flag is forming, just like on the SPX. Same ideas. We have all these moving averages now scrunched up together, which is, I guess, really bad. If you want a launch pad to the downside, that's kind of what is happening here. Again, if you see, I'll just draw it in here for you. This is, as good of a bear flag as I can draw, right? You put this trend line, boom, break the trend line, and you're gonna get another leg down. Where does it go? I mean, so that's the big thing, right? Do we break this area? Do we break this area, right? That's the big one, the 13th, October 13th. Do we come down to the bigger area below, right? Again, it's all in the equal weighted. That's a very good possibility, right? At 117, that's a big move. We'll just kind of extend that a little bit. So that's a big move. Let's just see how much that is. Another 17% on the RSP. Anyway, so we don't know what's going to happen, but to me, this does look like more of a bear flag, almost like a launch pad to the downside. Where does it stop? We don't know. It could be, this area right here or something like that. But bias is to the downside. That's the most important thing. Bias to the downside. This on the Qs. I want to go to regular Qs first. Regular Qs here. And I just silenced my wife, so I want to make sure that everything's okay on the phone. Okay. So here we go. Downtrend line, same thing as SPX. This one actually looks a little bit weaker because you're not getting this drift up. You're getting actually more of a drift sideways on this price action. So my guess would be on the week, it'd be even a little bit worse, which it was, down 0.4. And we'll see if this breaks the downside. Again, a lot of overhead supply in these names, a lot of overhead supplies. This trend line, I keep talking about it. Longer term, let's just go to a monthly chart. They'll be valid right now anyway. Here on the monthly chart, you can see this trend line from 2010 lows is extremely important. It's been touched multiple times in the last 12 years. It's a long time. It shows that how important that trend line is. And that trend line is right here. So if we do break down, what does price do when it gets to this 250, 251 level, right? That's the $1 million question, right? If it does break down, if it does take out this low, comes down to this trend line, does it become important again? We will find out. This trend line is not important, so we're going to take that out. Even this area right here, not important. Take that out. You see this overhead supply, and we have a flat to declining 50-day at once again in the Qs. Equal weight Qs look very similar to that on the week. They were actually up. That's something to take notice of. Okay, so Qs were down 0.4. Equal weighted Qs were up, basically even, we'll call it. That's relative outperformance. So what does that tell us? It tells us that the largest names, the Apples and the Teslas and so on and so forth, that make up a good percentage of the Qs, they were the worst performers, right? The mega caps, they pushed the index down, but the smaller stocks, they did okay. There may have been some buying under the surface. We don't know. That's why I'm telling you, we got to keep an open mind. Yes, maybe we get another leg down. Maybe we don't. Maybe this is a base that's being formed at this point. The most important thing right at this point is price has to get back above the 200-day, right? 200-day has to begin to flatten with price above it. That's where we can say, okay, things are changing. But as long as price is below a declining 200-day moving average, below every other important moving average as well, our bias has got to be to the bearish side, in my opinion. Okay, IWM, this is the head and shoulders area that we are concerned about, right? If this plays out, again, it has to break 163-ish, 163-ish. It has to get below 163, then things can go really bad, really fast, right? So that is the bearish scenario. And right now, it has not played out. Right now, it's a potential pattern. Again, price is below all of these moving averages. So the likelihood is things are going to move lower. What happens when it gets down here? We'll take that when it comes, right? But right now, this is, I wouldn't be shocked if we retest this 163-ish area. That would be totally within the norms of what this chart is telling me. This chart is saying that price is likely to go lower. Now, what if in all these charts, price doesn't go lower? That's that positive expectation breaker that says, okay, we're in a different environment. By the way, the first day of January, first week and first month, all really, really important. It sets the tone for the entire year. And so we need to pay attention to those dates. Those 3 dates are really, really important. And we'll make more emphasis on them at the right times. But as of right now, price underneath all these moving averages, I think retesting this 163, 164 area is very likely. Again, it has that more of a bear flag look to it. I don't even know if we're coming up into here. I'm going to take out these arrows because I don't even think they're relevant anymore. Moving sideways within the context. On the week, it was even. A lot of these charts were even when we should have been in the Santa Claus rally. That's it. End of story. Mid caps, let's just talk about them real fast. On the week, they were about even as well, slightly down. Again, looks like a bear flag, beautiful, perfect bear flag, looking like maybe this little inverse bottoming pattern works out. Maybe it doesn't. Listen, if we could get down here to 425-ish, and this could still be a bottoming pattern, right? So like don't, even if this bear flag plays out, it doesn't mean that this bottoming pattern's out of the question, especially if we get a nice little recovery and this 200-day moving average and price gets back above all of these moving averages. But as of right now, down seems like the most likely scenario. And let's just look at IWO. small cap growth. Again, sideways action is best, but really underneath all the moving averages, just like IWM and everything else. We have a very defined area that needs to hold. Right now, actually, this June area has held as a low. This may be the low. We won't know until after the fact, but price again needs to get above the 200-day moving average, and that needs to start to flatten out in order for me to take a more bullish posture. Right now, this is a very bearish looking chart. All right, those are the individual ETFs. I'm going to start with XLF. XLF is technically above its 200-day moving average, which is still declining, but again, has that bear flag look to it. So kind of like the mid caps, right? This looks just like the mid cap chart. And maybe we do get this bear flag that plays out, right? And maybe it's a 5-wave type pattern, right? Or something like that. And we get one more wave down, but maybe it's still a bottoming pattern, right? So maybe we do have a leg lower. This general area holds 32-ish, right? 32-ish holds, 32 and a quarter, whatever. And then price starts to recover and the 200-day starts to recover. I mean, you got to figure, going back 200 bars, one more dip lower would then take out kind of like all this information, right? As it starts to recover, you could potentially get above the 200 and get a flattening 200. That's a very good possibility. So again, maybe the first couple months of the year aren't good, few weeks, months. But if price action doesn't take out this area, if it definitely doesn't take out this area or this area, this is the financials. It's a big deal. So we got to watch them. So price above the 200-day, again, looks like it's going to have a leg lower, just in my opinion. But then if these areas hold, I think that'd be a very, very positive sign. It looks just like the mid caps. SMH, maybe the most important. Again, deep below that 200-day moving average. All of its moving averages. Again, arguably the most important of all the sectors. I mean, ultimately, this 167 has to hold. Would love to see, 189, 190 hold. Maybe we do get another leg down. Maybe it's to this 190, and maybe it makes the right side of a shoulder, right? Like, I'm going to draw it in now, right? Not that this is going to happen, but I would love to see something like this happen, right? I take all this out because it's not really that important anymore, right? So would love to see this kind of dip down, make the right side of a shoulder, and we have a beautiful bottoming pattern, right? We've been in this bear market now for a full year, actually a little bit longer, in my opinion. So about 13 months or so. So, I mean, just going back, just like the XLF, this is 200 days ago, right? So imagine like the first month or so, we get some kind of dip, first few weeks of the month or something, we get some kind of dip, we take out this other data here, and then as it recovers, we're going to have a flattening and potentially price above a flattening 200-day moving average. That would get me a little bit more bullish, right? I think it should get us all a little bit more bullish. Not that that's going to happen, but that's the bullish scenario. We cannot forget about the bullish scenario, especially if we get one more sharp move down, which, again, the charts are setting up for that. We don't know if it's going to happen. XTN, transports. All right, so this one, again, you got the bear flag look, just like all the other charts. There's your decline 200 trend line, very similar to SPX and so on and so forth. Would love to see this 63-ish, 63.50-ish hold. Again, transports would have to start to flatten out and get above, bearish look to them. And let's just look at housing real fast. So housing probably, it looks better than most. We have a low here, higher low here. And again, it does not make a strong bear flag, maybe a little one right here. But again, if we can hold this area, right, 153, 54, we'll call it, we can hold 54, then chances are we are going to get a, maybe another higher low, or, listen, housing could lead higher, right? For all we know. For all we know, prices get back above this 200-day moving average, and going back, I should have checked out these dates ahead of time. 200 days is right here. Again, maybe we get a little dip lower and then a quick recovery a few weeks into the year. And now we have a flat price above a flat 200-day moving average. And this could be some sort of double bottom-ish look to it. All right. So we got to, again, be positive. Now, price taking out this area right there. That's the bearish scenario, period, end of story. But it's good to look at both of them, right? Because I think we're going to get a good indication early into the year of what's happening. And I'm not even saying that this is going to V up. Any of this stuff is going to V up. But we can then look under the surface for those constructive setups. And maybe those things have, on the long side, which we haven't been able to really play on the long side for a while. But there's a lot of things under the surface that will have the wind at our back if we can get the right setups going into the new year, right? And really the first month of the year. So let's look at the internals. I'm going to go ahead and take some of this stuff off because I like to do that with my internal look. All right, so let's look at the VIX. Has the VIX spiked yet? The VIX is like dead, right? And again, maybe this dead VIX, maybe we need one more spike up for that kind of stuff to happen. But right now the VIX is very tame. I don't know if that's due to 0-day options or what. But I would love to see some volatility come back into the market one more time, maybe with one more strong move down, and then we can potentially look for bottoms, hopefully. IEI, HYG. Credit spreads, we had to spike up. It came back in, which is, I guess, nice to see. Made another, I guess, lower high compared to here. We'll just keep watching this to see what is going on. This was a take notice time when it was spiking up. It came right back in, less of a take notice. So we'll see what happens going forward. But again, credit spreads are not getting blown out. And I guess that's another feather in the bull case, right? Looking at breadth is down to only about 40%. You know what? Let it come back down, right? One more spike. Maybe we get that breadth washout that I would love to see. We got it almost down here. I feel like we just missed it, but it's close enough. And then we had a nice little run. Maybe we need to get another little washout, and then we'll go from there. And then looking at put call ratio, and again, so the put call ratio, I'm assuming it's due to 0-day options. So these spikes are abnormal, right? We've never seen them. Like you look at the monthly chart. Let's look at the weekly chart, right? I mean, I guess back here in 2018 we saw it, I guess, and here. So maybe I can't say we never saw them, but it's sorry about that. But when you look back into 2018, 2019, here's 2018, we really never saw it, on a real basis, on a closing basis. This is like unheard of, right? I mean, go back, I guess, you know what we saw in 2010. That's interesting. Anyway, we'll see what's going on here. We're going to keep watching it and see. We haven't been in this territory in a long time, so I'm not sure what to make of it. So I'm not really going to put any weight in it at all. That's the truth. Let's look at gold. We haven't looked at gold in a while. Look at gold on a weekly chart. And was this a false breakdown? Is it moving higher? I think it still has a lot to prove. Has to get above these levels right here. But there is a little bit of that safe haven mentality going on. Don't know if I'm going to factor that into my analysis. And then you have Bitcoin, which has like zero volatility right now, which is, again, weird. I mean, it has been flat since November, and that's very odd for Bitcoin, right? It's literally gone sideways, and maybe it's washing out everybody. And would love to see it move higher in Bitcoin as a risk on indicator. That would be awesome. All right, so state of the market. Well, let's look at ETH while we're here. ETH looks very similar. And again, it looks like people are just getting washed out of the name. That's what it looks like to me. Let's wrap it all up with, all right. So going into the new year, I think things are looking kind of looking on the bearish side. A lot of bearish looking charts out there. That being said, we laid out the bullish scenario for a lot of these charts as well, right? As things are coming down, areas that need to hold, ways that we can look for bullish outcomes. And we'll be following those ideas every week on the State of the Market video and decide when the wind is at our back and when the odds are in our favor to go long and to get more aggressive with our longs in the market. Right now, I don't think it makes sense to be aggressively long the market because the charts don't say that. That could change. I hope you all have a happy new year. I hope that it's all healthy and prosperous for everybody. And thank you all for watching the videos all year long. I do appreciate that. Like and subscribe to my channel. That'd be a great New Year's gift to me. Follow me on Twitter at AlphaCharts365. If you want more in-depth information, videos, market notes, all that stuff, I'm on Twitter with a super follow group. It's a small $10 fee, but I put out stuff all week long. You DM me, whatever, and I'll talk to you about that. Anyway, hope you all have a happy new year. Stay safe out there. Let's not get too bearish or bullish, or let's expect a pullback, or maybe one more leg down, see where it holds, and then maybe we can look for maybe some opportunities. You all take care. Have a great day. Bye.